Hello, everybody, and thank you for joining us today for this episode, Wednesday, June 15th. I'm joined alongside my colleague, Nick Mancini, our head of research, and amongst other things that he's a ninja at over at Trade the Chain. Again, still an interesting week that's going on. Before we kick it off, just want to say, none of this constitutes financial advice from me, Nick, Trade the Chain, or anything. We're just here to humor you. But Nick, we're going to talk about the Fed meeting today. We're going to talk about the basis points that were hiked up. We're also going to discuss what our thoughts are on the market as far as, are we at the bottom? Are we not at the bottom? But I also want to go off script for a minute and kind of discuss, what's going on in the atmosphere. And we've bantered about it for a little bit. Casually, but folks, let's just say you're not alone. This is a week of reckoning, and that's a play on words. But listen, there's a lot of people getting wrecked. There's a lot of value as well as hard dollars being lost. It obviously started with Luna, and then came in with rumors of insolvency that we covered the other day on Monday with Celsius. And then yesterday, there was talk about 3 Arrows, which is huge. I mean, 3 Arrows is big fun. The one thing I can say about that is it's proprietary capital. So it's, there's no investors necessarily being wrecked there except for the man himself. But there's a lot of positions across the street that are open, that are getting liquidated to fill some voids in the market. A couple things that have been going on. One, Nick and I will discuss some long positions that we took right before the Fed meeting, which are playing out pretty nicely right now. We'll see how that goes. But whenever you have a Fed meeting and there's a real big imbalance of information that's going on and where the direction's going to head, it creates a very opportunistic arbitrage opportunity. So, we'll tell you what those were and what money or we haven't realized them yet, what value we've gained as far as percentage points and stuff like that. So without further ado, Nick, I'd love to get your reaction to the FOMC as well as Jay Powell's comments afterwards at his press conference.
Yeah, so I completely agree with your earlier comments to kick it off. Like, I don't think 3AC is 3 Arrows Capital, of course, is systemic, but it's definitely, it's a signal of if it can happen to them, where else is it happening to those who we don't know about, and how deep does the web go, in addition to Celsius and of course what happened with Luna and all of the kind of the cross exposure that goes on. So I think that probably the biggest question is the overhang that's going to continue is the forced selling done? Are these margin calls going to get called? Things like that are things that we'll probably still be talking about, I assume, maybe next week or the following. So, but in reference to the Fed, which was another just absolute, mountain of what we have to deal with over the past week or so. We covered it very well, I think, in the newsletter and on the Daily Show. The 75. What first is very shocking is that both the White House and the Federal Reserve telegraphed very, very important information 48 hours prior. And I think I asked you and Ryan and a few other confidants that we work with. This hasn't happened. This much transparency is extremely rare. And the Fed is really trying to have it both ways. They want to please the market by giving us a heads up. They want to please the public by doing something about inflation. So there's kind of that push and pull of the psychology of what's going on. Then we actually got what we expected, the 75-point basis hike. Clearly, there was some front running going into that in the morning. We had an immediate, we had our classic Darth Maul wick or candle where we have 2 wicks in the body, like Darth Maul's lightsaber. That's an absolute classic within the next 5 to 15 minutes after Jerome Powell spoke. And then eventually the market started to listen to Jerome Powell, because like we said in the Trade the Chain community, along with in our posts and our videos, the hike is one thing, but we already kind of knew that. The guidance is what we will look for in terms of, guiding our trades, what we do with our money on the heels of the Fed decision. Now, the interesting part is, and something that we'll probably go through, is the series of statements Jerome Powell has made after the 75-point basis hike was given. Is he initially said, I don't expect 75-point basis hikes to be common. That's dovish. Then he said, we will do whatever it takes at the proper time. That sounds a little hawkish. Then he said, expect 50 to 75-point basis hikes in the future, which is very much, on the line to where I would assume he's got a wedgie for how much he's sitting on the fence. It's riding up where the sun don't shine right now. And I think the market eventually just kind of took that and said, you know what, we got what we expected. We've had so much negativity, so much selling. It's almost a buy the news type of event, because we got a little bit of dovish on the tail end. I hate to say it is dovish, because it really truly isn't, but it's not hawkish. And we've just had a horrible few weeks with the CPI print. So it would make sense that getting what we expect and hoping for, a good 2 to 3 weeks seems to be kind of where the market's at least from what I can tell.
I mean, you're pretty spot on with all of that. Also, I do want to add, you just take a look around right here. I mean, we had sentiment fall off, pretty sharply here, followed by the price on Bitcoin. Now, and then look at this reversal and look at this lag. Sentiment, it shot back up into positive territory. Price took a little time, lagged behind it. But it just goes to show our sentiment, prices following sentiment tone that we keep up.
Also, check out the daily as well, because the daily, I think we talked about this. If you go, it flipped. Yeah, look where it flipped bullish. I mean, it flipped bullish at where the provincial bottom was, I talked about this yesterday, and I kind of expected that rollover in the evening just to kind of, really flush some things out, because we typically do get that second bottom touch. But if you're looking, the thing about daily sentiment is it's intraday, intra-week. So you're not really trading off of that from a scalp perspective, an intra-hour perspective. But if you would have bought, where it was really flipping bullish after a dearth of bearishness, you had a pretty good opportunity, and you may likely have a good long-term buy considering where we are in the macro environment.
Yeah, no, that's absolutely correct. I mean, just taking a look at the market now, I love to see a sea of green on the 1-hour charts. That hasn't been happening as of late. So really excited about that. But look at this, 72% on the daily Bitcoin sentiment for bullish. Haven't seen that in quite some time.
Long time.
So really excited. One of the things that I heard from, I watch various crypto YouTube shows around. One of the things that it was interesting was this number right here of our total market cap actually has fallen in the last 24 hours to within 100 million of the high of the market cap, the crypto market cap in 2017 at the height. That's amazing.
Did we get over $1 trillion back then?
No, we
didn't. I remember that was like resistance.
Yeah, we just got up over 900 million. So that was an interesting stat I didn't know.
And I think so. What would the tippy top number of the previous, gigabull run, whatever, in 18 was like 19.5, 19.7, kind of depending on what exchange you're at. And what did we hit overnight? It was just under 20, I think. Well,
again, that depends on what exchange.
I'm looking at Binance just because that's where a lot of the. So we hit $20,097 is what I have, 98.
Yep, I got. Yep, same thing. It's a scary perch, and I was talking with Doug. Doug's one of our colleagues as well, Trade the Chain. I was talking to Doug this morning about that $20,000 number, right? Because we all have in our head the strong possibility of it hightailing it down to $18,000, $19,000. and hitting some key metrics over there. But I said to him, I think there's so much retail that's flooded into this market in the last year and a half. Everybody's sitting behind their computers for COVID. I said, I think that metric is going to be wrong. I think the metric is $20,000. And the reason I say that is the retail mentality is different than the technical mentality. And it's very different to open up your wallet and see $20,500 than it is to see $19,500. The fear gets real visually. Sure. So, I think 20,000 is a really important number. But on the flip side of that, let's look at some. What did we do? Let's look at some longs. Nick, what did you do today as far as trading?
Yeah, so let me share my chart real quick. That'll maybe be easier. Window, boom. Okay, so I think you have to give me. Yep, there we go. Okay, so this is the Bitcoin 5-minute chart, and it might honestly be worthwhile to go to the 1 minute just for how absolutely insane this is. But so last night, before we rolled over, I placed a short, I think, just before midnight, somewhere around here. We rolled over, ended up closing it very early in the morning. And then we ended up, back up here, way before the Fed, and we started to trickle down before clearly someone caught wind of exactly what was going to be announced just before it. And then we had a very mini double top, and then we plummeted back down. So the Fed announcement was, right around here, and then we plummeted. And so that was basically just the immediate reaction to Jerome Powell. And as soon as we started to curl up here, we had this nice little megaphone channel. And I love to, anytime, you get a nice strong bounce off of this, it's usually pretty fruitful. So I took a trade right around here. I think 20.8 is right when it started to break up here. I traded up here. I think I closed it around like 21.6 just because we had just tipped over previous resistance. And if you're trading heavy volatility like this, then you would expect it to roll over very much like it did. Obviously, we got a bigger boost, but you close trades in profit. And why did I pick, this level? Well, we busted under here and we immediately came back down, and then we tested this liquidity level as support again. And when we got, some strong wicks moving higher, what gave me my biggest signal, I'll tell you this, and this is, sounds weird, but I told the trade the chain community the same thing, is the H1 trends, as you'll hear them technically called, the hour one trends. Solana, along with AVAX, busted through its 1 hour 100-day moving average. Now, this is very significant because this has been stalwart defense for more than a week, or 5-6 days. Now, since those risky assets typically tend to lead Bitcoin, I use them as a leading indicator when things get hairy. It struck me that Bitcoin would likely try and test the same scenario with the 1 hour 50 moving average. And now you can see we tipped above it, and now we're still facing it as resistance. But at this time, given the fact of what the Fed had said, the Fed said this at 12:38. And if I'm looking at, midway through the 12-hour candle, I'm like, hey, this looks strong right here. We just tested that resistance level. We closed above it, nice wick, and I traded up. And so I'll admit that I probably did something a little bit risky that I wouldn't recommend our audience do, but I also traded this 1 minute 50 moving average touch as well, because typically in any sort of momentum shift, you'll see bounces off of these moving averages. And I trade, and I think we mentioned this last time we spoke, I love to trade the moving average touches, because depending on the trend flip, you can usually get at least one bounce. And then for longer term trends, you can usually get, where your marquee resistance is going to be, or targets if you think that support is holding up. So I know that was a bit more long-winded than I think you asked, Alex, but those are the steps that I'm taking in my head. Sentiment's bullish, hourly sentiment's bullish. Solana is increasing faster than other assets. The Fed gives us a dovish signal, and Bitcoin holds support that it had just tested in the morning. And so all my boxes are checked, and that's what prompted me to go long.
Yeah, same here. I mean, I went long on Bitcoin, unlevered spot. right at the Fed announcement. I think my entry point for my position was around 20,006. And so that turned into a gentle just under 6% gain in about 30 minutes. So really happy about that. One of the things that I want to ask you, are we at the bottom? Is this it, or are we going to ferry down even more? Has the Fed done enough? And it can't do much more stuff. Has the Fed done enough to lift these markets up?
So it depends. Do we think that SPY, or do we think the S&P 500 has reached the bottom? And I think that's probably, I don't think so. And that's my struggle, is because and if you want to pull my screen up, I've got I'm going to show SPY, and then I'm going to show Bitcoin, and of course this is not scientific analysis. This is not exact, but typically how I've been kind of approaching crypto versus equities is 340. So we're looking at SPY futures right now, so it's going to look a little weird, but this would be 340 on the SPY chart. That's pretty much a big target for a lot of analysts. Now, do we reach that low? Maybe not. But the 1 week 200 moving average is 3,500 or 350 on the SPY. That's another 7.5% from current price. And I find that to be likely given the current environment. Now, if we look at Bitcoin, we've got the 1 week 200 moving average on Bitcoin. And look where it is. We're hovering just below it. We obviously have a good opportunity to close above it, considering it's only Wednesday. But in what world do we think that crypto would bottom well before equities? And I think that's probably the biggest question to ask on a macro perspective is, do we really think that crypto would have a multi-week bottom prior to equities? Now, we do know that crypto typically leads risk. Like I just said, Solana leads Bitcoin, and we've seen, vice versa on the S&P 500 and crypto. But if I'm looking at a 7.5% likely drawdown from the S&P from current levels, I would assume at least a 28 to 30% drawdown in crypto, which would lead us at that would lead us at about a $16,000 bottom. Now, that's not exact science, but that's very much how I've been approaching this entire bear market, and it's been more or less accurate. And it has to do with correlation and timing. Why would crypto just immediately decorrelate and do it weeks prior when the Fed has been slapping it around along with every single equity that we know and love? That's kind of what I'm asking myself right now.
Yeah. Questions, and they're good questions to be asking too. So, I tend to agree with you on the long game, as well as I see Lucas in the comments down there. I agree. We're not at the bottom. I think, things are there's going to be more pain. I do think that the window is going to be shorter this time. This is not going to be like 2018, 2019 into 2020. I think we're going to have a shorter period of winter, and we're going to have a long tail of progressing back up. I do want to I want to go to Doug's comment in the chats about systemic risk or reputational risk with Celsius. With what's happening with Celsius, it's making a lot of people question CeFi, right? And what's interesting is, the comments around Celsius are they played in the DeFi sandbox and they're a CeFi company, and that's interesting in its own right. But Nick, are you questioning the likes of BlockFi? Are you questioning the likes of any centralized platform now that's creating yield for their customers?
So I think in the context of Celsius itself, I think they have any company that goes through an event like this is going to have a reputational problem. That's just the fact of the matter. So how they overcome that, is completely going to be up to them. But I don't think that people are going to be coming back to Celsius in droves. But as for the rest of the lending markets, I would assume that it will still go strong because if I'm thinking from a PR perspective, if I am safe, and a lot of companies have actually been doing this, BlockFi, I think Nexo, I got an email from Voyager last night in regard to these things. So they're going to come out and play offensive and say, here's what we're doing to make money. Here's where your money is. Here's how you can trust us. And I think I think there's an immediate shock always. It's always a bank run. Eventually people will come back and feel more safe, but it'll never be the same number. Eventually yields will come down due to lack of volatility that is likely to come. I don't think, these double-digit yields are going to be forever or even high single-digit. And the market will reach its equilibrium. I don't think that the lending market is going to go away because yield, and we discussed this in very much during the bull market, is when the market's hot and you have money, it's not sitting there. It's getting yield somewhere. You are working. If you're an intelligent investor, you are working that money, and anyone with a chunk of change thinks they're an intelligent investor right now. So yield will always be here. But how they repackage it, whether they rebrand it, whether it becomes less retail focused, I think those things will come, but I don't think anyone's going to say F this crypto yield. I just think people are going to be much more, I think they're going to scrutinize it more, diversify more, and probably put less in the near term than they would have prior to this event.
Yeah, I completely agree. But and the systemic reputational damage is real. You're going to have people thinking twice and questioning, and you should have been doing that all along. We all should have been doing that all along. So, just it's due diligence, do your own research. If I'm new to crypto, I think I would get my feet wet at this time. I think I'd get my feet wet. If I was new to crypto, not a lot of money, to put on the table. I think now is where I would probably get Bitcoin, Ethereum, just those two, and just touch the markets a little bit. So
well, I think in the grand scheme of things, like you can dip your toes into Apple stock, Amazon stock, and you probably should. I'm not going to tell you that you shouldn't. Because those are likely positive long-term investments, just where leadership has taken them and where they're being guided. But in the same sense, if you're talking about investment opportunities and you're thinking long-term, even if you bought Bitcoin at 30K, 40K, whatever it was, you probably didn't have a 1-year investment horizon on it. Times may be tough now, and you may have had to do what you have to do, and others will. And we all know people who will have to make difficult decisions. But if you have the capital, we just said that the bottom that we're thinking at, the max bottom would probably be 15 to 16K. If we're at 20, you have a max 20. You don't have max, but you have a likely 25% drawdown before a potential exponential run that could be here in the next 3 to 5 years. So, if you're thinking long-term investment perspective, you look at your risk versus your reward, and does that seem feasible based on what you have? And that's trading. If I can lose 20% to make 400% or 500% over a 5 to 10 year investment horizon, I think you'd find a lot of macro investors would call you crazy for not, at least taking the opportunity to some degree. So
I agree. And here we go. We were all in the upward direction as we started this broadcast 23 minutes ago, and we are now rolling over into a downward projection. So we'll see how this goes. What's your speculation on the overnight for price action?
Well, we're definitely going to see a lot more volatility. I think probably the wisest trade of them all was just to go ahead and long the VIX. But they like to keep that trade. There's not many good synthetic assets out there for it, and I'm a bit of a leverage hound. So I think that probably the best way to look at this is cop out answer S&P 500. If we start getting big wicks, and actually, the hourly on the S&P 500 futures right now is not looking extremely hot. But if we get rejected at the 15 minutes, the 30 minutes, 200-day moving average on the S&P 500, we likely completely roll over. And that would be very unfortunate, because I think we did have a fighting chance until Jerome Powell kind of opened up that kind of hawkish narrative. But it would not surprise me to see us move in a bullish fashion just based on where sentiment is coming out of, and the fact that the market seemingly, it just needs some relief before things start to get really freaking bad. So I'm actually very torn, because I think the initial reaction that we had was that if we got if we got guidance saying that 50-point basis hikes were likely in the future, I did say we were going to have a boost and then roll over. And so that's pretty much what we got. And so we had our boost, but do we roll over here? So if the S&P 500 gets rejected at its, H1 trend, we probably roll over. Bitcoin is looking like a potential rejection at its H1 trend, and then we may roll over. But this is where volatility gets difficult, and this is where accurate individuals are made to be humbled. Very much so. So I would say in my gut, it's likely we go bullish, and that is because of sentiment. That is because of where we've come out of. But I'm fully prepared to be disappointed, if that makes sense.
It does make a lot of sense, and it's something that there's a lot of fluid motion going on right now. I mean, the one thing I'll say is that when you first go into a bear market cycle pretty hard, there's no shortage of interest. We were kind of sleeping the last couple of weeks until we got in here, but either way, one of the ways you guys can keep up, and thank you for watching today. Don't forget to hit the like button, and if you haven't subscribed, please do so down below. But I also want to share right here. This is the Trade the Chain channel. Nick is on here every day breaking down the market. So if you hop over there, do subscribe if you want to keep up to date with all this great information. We definitely appreciate it. And thank you very much. Is Nick left-handed? I don't know why that caught my eye just now. Are you left-handed, Nick?
I'm not left-handed. That's actually the second person to ask me that in the last month. I guess I do left-handed things. Like I typically drive with my left hand like this, and then I wear my watch on my right hand. So I guess I'm a weirdo. Whatever.
Guys, thank you very much for watching. We will actually head over to Trade Chain's channel, subscribe there. You'll see Nick tomorrow. I'll be on as well. And hang on to your handlebars as always. Throw in the comments if there's something, questions that you have that's going on, and we'll try to get to them in tomorrow's episode. Take it easy, guys, and be safe out there.